Hey everybody, Chuck Barone here, Friday, September the 9th, 2022. Crazy end to a crazy week, and we're off to another crazy month, it looks like. I don't know, maybe it's just me being an old school kind of guy, but I'm longing for the days of normal. Like, okay, the market was up or the market was down, but there's not all this intrigue. It's earnings driven. We all kind of understand how it works. But this way this market's going right now, I don't know how anybody can kind of get a grip on where the hell things are going here. Anyway, as always, before we start the show, just want to thank everybody for their support. We appreciate you guys, your support for the videos and the channel and all the stuff you guys do every day to support the show, make it a success. It's all because of you guys, and we appreciate it. In the markets today, well, an interesting day in the markets for everybody. Stock market today, great day for the market. No real rhyme or reason in my mind why, but stocks were up nicely across the board, 1.5% to 2%. NASDAQ had a really good day. Looked like, when I was looking things over, it looked like everything was green today in the stock market. Snaps a 3-week losing streak for the market. So I guess, you know, in gamblers' language, the market was due for a better week, and we got it. So yay, market has, so it won't be so painful having a look at maybe what your 401k is looking like over the weekend. The bond market today down, bonds selling off a little bit. We got some rates that are pretty shocking here, guys. We got 3.57 on the 2-year. 3.57, the highest rate we've seen on the 2-year since 2007. The 10-year, the one we're all watching, sitting at 3.32, up about 7 basis points today to a number that I know the stock market does not like. So I was surprised to see, with rates moving the way they did today, the market rallying like crazy, but here we are. The dollar today down small, still above 109 on the dollar index. Right now, there's really no competition for the dollar among the world's currencies, so expect the dollar to kind of stay strong for a little bit until we get a reason to see it come down. The dollar being down small, we had an up small day in metals today. So gold up, $1,718 per ounce. Silver sitting at $18.93 per ounce. A nice little rally for silver. I was happy to see that. I was worried that silver was going to get down around $15. Now it looks like it's heading back up toward $20. A good, nice little move for metals today. Oil up, $86.18 per barrel for West Texas Intermediate. Natural gas, $8.05 for their million British thermal units. Natural gas up as well today. You guys know the story with these commodities. It's all demand driven, or anticipation of demand. And it's been gyrating all over the place with, we need the demand's up, supplies down, the markets rally. No, China's having a recession, or they're having another COVID lockdown, or whatever's happening. Now they're down. They've been gyrating all over the place. Tough to be playing these markets, guys. A little too volatile for my taste. Bitcoin today up a very big day, up almost 10% today, really rallying up to 21,274 last time I looked. Bitcoin really needed this rally, guys. It's good to see it bounce off. Looks like it bounced pretty good from around 18 and change, or 19,000 up to this level. I'd like to see it now. If it doesn't continue rallying, at least stay here and start consolidating, build some strength at this number, some real support at 21,000, rather than let's shake some of the weak holders out and let's get ready for the next leg up for Bitcoin. And stuff you guys need to hear today, some crazy, crazy stuff. And again, giving us a lot of mixed signals on what's really happening in this economy. So let's go through some of this stuff. I read today, foreclosures here in the United States jumped 118% year over year. So now we're already, this is very early in this housing recession, we're already seeing foreclosures doubling over the last year, even in spite of prices continuing to go up. They said right now there were almost 35,000 houses across the country in foreclosure. That's more than double from where we were a year ago. So the real estate correction, you know, starting to happen. Banks are going to be owning some properties again. All you realtors, your REO guys, get ready. Here we go with real estate. Other interesting stuff today. I was reading that household wealth, the wealth of U.S. households, declined over $6 trillion in the second quarter. So when they calculate household wealth, of course, it's assets versus debt. People are borrowing more money, stock market tanking, real estate not going up like it was, other assets going down in value. So that led to the household wealth falling $6 trillion in one quarter. That's a record. It's never fallen that fast. Not portending good stuff for households and the future here in this economy. Also today, very interesting stuff. Bank of America comes out, and they've been very bearish, talking about this big recession. Well, today they revised their forecast. Now they're talking less certainty about a recession, talking about possible positive GDP growth this year. So Bank of America saying, again, even for real professionals who watch this market or are in this market every day, a very difficult market to figure out right now. So there's going to be some weirdness with there, or else it's just designed to confuse. One or the other, but either way, B of A backtracking on their call for a deep recession. Also, the Atlanta Fed today. We were watching the Fed tracker for negative GDP growth pretty closely in the last quarter. Right now, the Atlanta Fed tracker, they're predicting third quarter GDP at this point going to be up 1.4%. So now the Atlanta tracker is saying that GDP is growing here in the third quarter, which is quite a big, it doesn't feel like it is. It doesn't feel any stronger, the economy does, than the last quarter, but apparently it is. If these numbers are to be believed, we're going to have some economic growth here in the third quarter. Also, we had Treasury Secretary Yellen out there today, from another one of my favorites. She is saying that the U.S. economy is heading in the right direction. Well, thank God we have Janet Yellen to reassure us there, because we're certainly going to believe her over what we're seeing in the supermarket, or $6 trillion in loss in household wealth, and all this other stuff we're seeing here. Thank God we have Janet Yellen to make sure we all know what's really happening. Also, in real estate news today, we were looking at the multi-level or the multiple listing services here in Nevada, and apparently it looks like prices in Vegas are continuing to decline. As far as we can tell, it looks like they're down already another 15,000 this month here in September, even though it's only the 9th so far. Vegas prices have been going down. We started at a peak of 382. It ended the month of August at 450. So we went from 482 to 450 in just a couple of months. Now it looks like we're down to about 435. So this decline is starting to accelerate. And it's happening not only in Las Vegas, but in a lot of these other super hot markets we've been seeing, Boise, Idaho, Seattle, Phoenix, and other places. So this real estate thing with this news, this is kind of insider news, and they'll be talking about this toward the end of the month, but you guys will already know. And this foreclosure jump showing that things are not so great as far as the real estate market goes. Some interesting stuff today, some silly stuff. The Federal Reserve, they had an ex-vice chairman talking, and he said come hell or high water, the Federal Reserve is targeting a 4% overnight rate by the end of the year. So that would mean the 3/4 point bump coming here in September, which would get us to about 3.1% roughly, and then 2 more half-point increases at their final 2 meetings for the year, I think in October and November, getting us to 4.1 overnight rate by the end of the year. I don't know, guys. I think that this could flip either way depending on how bad the economy goes. With these positive signs in the economy, what they're expecting GDP to grow, I wouldn't be surprised to see these rate increases come and, overnight rate get to 4%. But I think that if the economy really starts showing some serious deterioration, I'm not sure if the Fed has the backbone to keep these rate hikes going in the face of a pretty serious recession. It's going to be a very interesting finish to this year. Let's hold on and we'll see. Also, another one that made me laugh today. BlackRock CEO Mr. Fink came out, and he has the solution to inflation, guys. Fink says that if we all just return to the office and stop from this work from home, that alone will solve inflation. Okay, this is a new theory. Maybe he needs to give Powell a call and just get everybody back to the office, and that'll solve it without rate increases or economic pain. Just some people having to trudge back to the office that no one wants to go back to. Could these guys get any more out of touch with the real world, man? I don't think so. And anyway, that's what we have today, guys. There's just not a lot of data coming out. Big stuff coming next week as we move zooming along toward the Fed rate increase in their Federal Open Market Committee this month. There'll be a lot of data coming out next week. But before we go, I've really been having some fun the last couple of days with this further signs of the apocalypse, right? So the first one I did was Wednesday, which was the Kardashian fund. Kim Kardashian starting a private equity fund, my favorite of the week. Yesterday's was $10,000 per person dinner they're holding here in Las Vegas for 20 rich people who want to flaunt their wealth to everybody's face. And today's new one, which made me kind of laugh too. We know in some cities around the country, New York, San Francisco, Boston, and some big cities, parking is pretty expensive. A lot of people don't even own cars because the parking is so outrageous. I was reading an article this morning. A guy is letting his parking space in San Francisco go for the bargain basement price of $90,000. So, if you want to park your car in San Francisco, it doesn't matter how far away from your residence is. You probably have to take an Uber to get to your house, right? But it's parking places in San Francisco are going for the bargain basement price of $90,000. I thought it would be, when I decided to kind of wrap the show up with this, I thought it might be a little bit harder to find something silly that rich people do that would make ordinary people, working people, roll their eyes. It's been a lot easier than I thought, guys. $90,000 for a parking spot. When I bought my first place, it was about $30,000 for the first condo I ever bought. Now you got to spend $90,000 for one parking spot in a friggin' garage somewhere. The world's off its rocker, guys. Anyway, that's it for the week. It's been a crazy one. Take this weekend. It's going to be a very good one. Try to get your mind off of all this economic stuff and all the horrible stuff going on. Enjoy the weekend with your families, the people you care about. Of course, if you get a chance, NFL's kicking off this Sunday. We had a glorious win last night for the Bills. We're off and running, guys. And have a great weekend. Relax. We'll be back with more crazy Monday and through the week. Have a great weekend. If we don't talk to you before then and some crazy emergency comes up, take care. We'll talk to you Monday. Thanks.